If interest rates were to rise significantly in the future, would there still be so much demand for HICL? Would it be such an attractive investment?
It's a good question, and by its nature, there's an element of speculation that comes into this. I think one thing I would say is that returns from HICL's portfolio of investments are correlated to increases in interest rates, because a lot of the underlying investments have quite a lot of cash on deposit. To the extent interest rates go up, then the returns on that cash on deposit will increase. And typically as well, interest rate rises are associated with increases in inflation. HICL's portfolio returns increase as inflation rates increase. Having said that, I think there is a point where if interest rates start to rise, it's possible that the discount rates that are used to value these investments in the balance sheet of HICL, but also other members of the infrastructure investment company peer group, it's possible those discount rates could start to go up. I would just note though that if you look back over history, the 11 years since HICL IPO'd, there have been times when sovereign bonds or government bond yields have been much higher than they are today, and risk premium is much smaller. So that suggests, if you look at discount rates from that perspective, that there's room for interest rates to increase before that effect will necessarily ripple through into changes in discount rates which are used to value these assets. So I think it's all about what's the relative attraction of infrastructure compared to other investment classes. And certainly for the time being, as we were talking about a moment ago, we see continued interest from investors, including in the current environment where perhaps there is slightly more expectation of interest rate rises than there has been for the last few years.
Yes, although it still looks quite unlikely in the short term.